Hello students and traders, good morning, good afternoon, good evening from wherever you are around the world. Welcome to another session of the All-Round Analyst with FX Calapanzi. This morning I would like us to look very quickly at the Euro-US dollar. I had to step out quite early, so I'm out and I'm out in traffic, so there'll be some noise in the background, so please bear with me. But I just wanted to share this very quick one on the Euro-US dollar. So if we look at the monthly, we can see very clearly that this market is let's see. You can see the market started from here, came down, went up, came down, and went up to this point. Now we are expecting this market to come down. Okay, so our perspective here is obviously bearish on the monthly. Okay, that having been spotted out, we can. What are the reasons why we would expect this market to go bearish or continue bearish? Let me show you one of those reasons. If we see here, we see the market move from this other block going upwards and came all the way up to this other block above here. Here's the other block. So that's the other block. Take this out. So we see how the market has progressed, moving from this other block to this other block, tapped into this other block, and tapped into this one. As long as the market did not break above this, but it's going bearish, we expect the market to continue going all the way down. Okay, so this is on the monthly, so we're going to go down to its lower time frame, so we follow up and follow on sequentially. All right, so the next time frame I'll be looking at now is going to be the weekly. We're going to try and make it as quick as possible so we can get back to doing other things we need to do. Alright, so here's our other block up here, and what do we see? The other block from the monthly plays out perfectly well on the weekly. We see that this market, we can even reduce the other block just a little bit, last up move before the down move, and that is our other block there. And we can further bring this here, and then we see perfectly our other block. Or we could even bring it here, the last high. You can see the market came and found good reversal within that area, and that has caused this push to the downside. Market has come back for a retest, and it will follow up with a downward move. Okay, so from the weekly we can see that the market is obviously bearish, and going on from the weekly, where will be our target? We expect the market to come all the way down and take out these levels here. The market is expected to do this, having found reversal here, go all the way down and find some reversal here before it pushes down and goes beyond all of this to take out all the lows, the liquidity below these lows down here. Okay, so that's on the monthly. Having established our position on the monthly, I like to go on to the daily, so we see what we're up again. Now if we were to trade the weekly, we know we cannot trade this yet because we would want to see a break of this structure, which we don't have yet. But the market is going back for a retest, and then we'll wait for a break of this structure, a pullback, and then we'll be looking to trade. So that is why I do not trade the weekly. It's too large a time frame for me. I'll go down now very quickly to the daily. If we look at the daily, what do we see? Remember, our target is bearish. We are going bearish. So anything that doesn't spell bearish would not be in my interest this morning. So here we are. We see our first touch into that area, and the market pushed nicely out. We see this level was taken out, which we can say is a break of structure. Market took out this level, brought this down move, came to test this level, and then confirmed that reversal, and then went all the way down, took out another level of resistance here, another structure, or sorry, support rather, and gave us this low and has pulled back to give us another retest. Now at this point in time, what do we expect the market to do? The market is giving us confirmation that this other block here is holding, and as such the market is going all the way bearish. So we have confirmation that this market is bearish from the perspective of the daily. So having had this retest, we'll have our concentration now around this area. So I'll push this away just a little bit, and then I'd like to zoom in on this particular area so we see how the market has thrived inside that particular area. So I'll move on to the 4 hour, and let's see what the market has done in all of that. It's a whole lot of information there. Okay, let's see. Now what do we see? This is our highest point. I have to clean up this chart just a little bit. Okay. I had a lot of moves in the market. I did a lot of trades around that area. That's why we have so much cluster of information there. So I'm just going to clear out the analysis I did while I was taking those trades, so you can have a clear view of what is going on here. Okay. Sorry. Okay. Sorry, just give me 1 minute and I'll be done. Okay. Alright. Okay. Alright, so I think it's good enough this way. Let's see what we can make out of it while continuing analysis. Alright, so here we are. This is our highest point, and that is our highest point. What does it tell us? That is the other block to watch out for, right? Good. What did this other block do? It took out all the highs, all the liquidity above these highs, right? Okay, fine. And that's our new other block. What happened? The market came down, and we had this break of structure. This down move brought this break of structure. And what did the market do? Having broken structure, it goes back to the origin, which is this other block to test, finds level of resistance there, finds a reason to U-turn. Orders which were opened at this point have been closed, and the market has proceeded again lower, taking out another level of structure. And what does it do? It comes back again to another order block. Where is the next order block? Now this is the first order block. So this was tested and it was validated. Now next order block to have watched out for is this one. And the market came right into it. Remember, up move before the down move. This is the candle of interest. This particular candle is the candle of interest, and that is where we put our order block. And what did the market do? The market came beautifully up and came right into the order block at this point, following which the market began to push downwards. Now what have we seen from this point? The market did not go down in a straight line. The market never moves in a straight line. It moves in waves. It came, brought this down move, pull back about 50% of this down push, and then pushed down again. So the market is currently strongly bearish, and I expect this market to continue all the way bearish to get to most of those levels we found way below. But at this point, if you're already in on a short, hold your position. It looks good. I'm in on a short, which I am taking all the way down, and yeah, I've locked in profit at this point. So this pullback, I locked in profit, and market is going all the way down. We're making more profit, and so next thing we should be asking ourselves now is, how do we look to enter this market? And I'm going to show you that very quickly. Remember, because the market is bearish, we want to sell. And what do you do? How do you sell? How do you enter short positions? The secret to entering short positions in the market is to entering positions as a whole, you buy low and sell high. So as the market is coming down here now, it's not a good place to sell. We want it to come to a high point, we sell at a high point. It goes down to a low point, we buy at a low point. Goes up to a high point, we sell at a high point. That is how you make profit consistently in the market. Okay, so at this point in time, selling would not be a good idea because the market is at a low price. We want a pullback before we're looking for a possible re-entry somewhere around here, which would be somewhere around this block of orders somewhere here, or the market might even go all the way up to deal with this. Remember, the market has a reason for moving. What is one of the reasons why the market moves? The market goes back to other blocks and also to fill up levels of imbalance. We see a large imbalance here. If you don't understand imbalance, you do well to join my mentorship session. You'd learn a whole lot about imbalance. The market always goes back to fill imbalance it has created. Let me show you some examples. Now, this is an imbalance created here, and the market came nicely with this down to fill up that imbalance. This is now another imbalance that has been created, which we expect the market to come in the long run, in the near future, to fill up another large imbalance, which the market will eventually come fill up with time. But all of these are going to be filled up. That is why we have a strong conviction that the market will go down and would one day come up to fill up this imbalance, and then fill even this one, and then test this level possibly. If it doesn't clear out the highs, then it drops again down bearish. Remember, our perspective on the larger time frame for this pair is bearish, so we would be interested in down moves. Alright, so Euro US dollar is bearish. Entry, we wait for the market to pull back before another entry. If you're already in holding positions and looking for the market to make us profit and make us money down the way. That'll be all for this morning, keeping it short and simple. Remember, I'm always your host, Efus Kalapanzi, and I'm out.